On-chain data seems to point towards the long-term holders being the reason for the recent price declines. They reactivate Bitcoin that hasn't moved for years, and they are now selling. And that selling is faster than any adoption metrics for Bitcoin. Now the big question is, when are those long-term holders going to stop their selling? When will this all be over? I think a very good anchor point is the average cost basis of the market. When the long-term holder is not in profit anymore, there's no more profit to take. And that's probably when things might turn around. Now have a look at the net unrealized profit and loss. We've got Bitcoin's price hovering from one bull market to a bear market, another bull, another bear. This is a logarithmic scale. So the differences here are 10x with every step. The net unrealized profit and loss is an oscillator that shows us when the market is in aggregate not in profit anymore. And that's very often the turnaround point. So if the bull market doesn't continue, if the current momentum cannot prevail, and we are actually turning around, then very likely we will continue to go down until the net unrealized profit and loss is actually a loss and not a profit. What also tends to happen is that as the price increases during a bull market, that already during that increase, long-term holders tend to sell. They sell towards the new entrants. They sell towards the people that just get into the asset class because they see prices increase. The new people, they just want to get onto the current rally. They're not really interested in, say, Bitcoin for the long term. They just want to get short-term gains. And so the best time to buy is when there's no such tourists, when there's no new entrants, when it's only the long-term holders that are trading. And that's measured by the realized HODL ratio. Is currently the short-term holder mainly trading? That's when we are in the red area. Or is it the long-term holder that's trading? That's when we are in the green area. And again, when we are in green, we want to buy. When we are in red, we want to sell. And we don't necessarily have to hit the extremes all the time. We haven't even hit it when Bitcoin got to 60K. But we are oscillating in a range and we are still very far away from the green bottom. So again, if we are entering a bear market, what we've seen in the last few weeks might just be an introduction of what's about to come. Fundamentally, the problem is that the whales, the long-term holders, they get out. Have a look at the Bitcoin that has not moved for the last 7 years. Yes, there was some selling in 2021, which then caused the Bitcoin price to peak. Then there was much less of that selling during the bear market. But now, as prices increase again, we see much more selling. By the way, if this is not your very first time watching this channel, then feel free to subscribe over here. I publish videos regularly, and when you're subscribed, YouTube is more likely to recommend the videos of this channel again. This is one of my favorite metrics, the coin days destroyed. When Bitcoin hasn't moved for a long time and suddenly gets reactivated, that's when coin days get destroyed. This is a metric of how much supply suddenly enters the market that hasn't been around during the bull market prior. So we appreciate it. Bitcoin went all the way from $200 up to $2,000, right, at 10x. And only after that, the long-term holders started selling off. The same is true for the subsequent rally, right, from 3.5K all the way up to 20K. Once we hit the old all-time high, that's when the long-term holders started selling again. This time, we've got the same situation. Bitcoin recovered from 16K back to the all-time high, and Coindays get destroyed again. Just with the difference that this time we continue to rally a bit longer, even though the price appreciation is much, much slower now, and still the selling pressure prevails. It's now at very comparable levels to this massive bull run, right? When Bitcoin made this 100x return from $200 to $20,000. And that's actually the concerning point about this price decline. It's not necessarily that long-term holders take profit. It's that despite not seeing really a rally in price, the selling pressure is as high as it has ever been. And we all have to ask ourselves, why is that the case? Why do we suddenly see all of those long-term holders selling? Shouldn't we expect that much selling only after Bitcoin does another doubling and tripling and quadrupling in a short period of time? This is not what we have seen in the last months. Have a look at the number of Bitcoin that have not moved for the last year. This tends to be high when we are at a market cycle bottom, because again, short-term speculation is gone. Only the long-term holders are dealing with the market. We should get out when the long-term holders don't do anything anymore, when it's only short-term speculation that's dominating the market. What I find interesting about this chart is how it went to very low levels at the peak of every cycle. Yes, we didn't hit the zero line when Bitcoin hit the 72K, but in general, right, we see a very clear trend. Again, it was a great time to buy when the long-term holders dominated the price action, but they are reducing their exposure. They're reducing their activity. And they are not yet at the levels we have seen before when things turned around. And that's the big issue. We see the long-term holders continuing to exit the market, yet the price already fell quite a bit from the all-time high. This price depression is very different to prior movements in Bitcoin. In prior movements, we pretty much had this working as clockwork. So the price went up, the long-term holders took profit, the short-term holders pushed it a bit higher, and then at some point when there wasn't enough new short-term holders entering the space, then the short-term holders couldn't make any more money, they sold off and a bear market happened. As the price declined further and further, the long-term holders bought for those lower prices, waited for a bottoming to occur, and then as we hit a new all-time high again, that's when the long-term holders started to take profit again. That happened 3 times. But this time the long-term holders are selling despite the price not hitting any new all-time highs. They were already selling much more aggressively from the way from 72K to 125K. They were selling much more than they did during prior bull runs. Now, even as we don't see any new all-time highs, they continue to sell. That's the big issue. And because of that, I time the market a bit more short-term now. I don't just time the macro cycles. I look at where the momentum is bringing us. And as you know, I very much like the 44-day simple moving average. And I just wait until we cross that moving average, until we maybe see a bit more positive momentum again. If we don't see that, and if Bitcoin isn't going above 100K again, then I don't know what might turn things around, right? The long-term holders sell, Wall Street is not buying, so the treasury companies are out, the ETFs don't buy. And so who's the marginal buyer at this point? What's the potential expected return? Another doubling and tripling in Bitcoin short term? I doubt it at the current price level. But once we have gone down to 60, 50, 40K, then the risk to reward is a bit better. And maybe at that point, the long-term holders will stop offloading. Maybe then the coin days destroyed is low again. And that's when we should be buying. That's when Bitcoin was close to 16K. Now, this whole game can be as complex or as simple as we want. We can just dollar cost average into the market, just bet on long-term adoption, bet on long-term devaluation of money, and we are fine. We don't necessarily have to time the market. Alternatively, we can make it very complex, as in we try to follow every single piece of news. We try to get an edge by being more informed than the average market participant. I think the best is a middle ground, trying to still time the market, but not just based on guesswork, based on mathematical approaches that used to work pretty well in the past. And so this is my favorite approach. It's following a technical indicator, the moving average, that historically worked the best. What we see over here, that's the 44-day simple moving average. And the strategy is very straightforward. We go long, we bet on rising prices whenever we are above that moving average, and we bet on falling prices whenever we are below that moving average. Now, I've backtested all moving averages from the 2-day to the 200-day, and the 44-day is one of the best. And historically, this worked very well. Will it work in the future? Who knows? But at least over the last 10 years, it performed much better compared to just buying and holding. Buying and holding is the line here in white. Every horizontal line here, by the way, that's a 10x return. So this performance is more than 100x better than just buying and holding Bitcoin. Here's the same performance measured in BTC. And so that's then the potential alternative to just dollar cost averaging into Bitcoin, trying to ride the market. Now you can simply trade this yourself, right? You can just buy and sell whenever you're above or below the 44-day simple moving average. Or if you wanted to, you can also allocate towards that strategy directly. So that's part of the premium membership of this channel. The link is down below. It's thebitcoinstrader.com. A link to Premium pops up here on the screen. It will lead you to the website. Thanks again for watching and see you next time. Cheers.